More minutes. Hang tight and we'll get started with today's webinar. Good morning to our friends from Australia, and good evening to those of us over where we are here in the United States and everything else in between. We're really happy to have you here. We've got a great webinar presentation from Andrew Abraham joining us today. And before we get started, let me just give you a little background. Andrew's actually one of my favorite presenters in this webinar room. He has, I think, a really strong philosophy of trend following, and he's a very disciplined trader. He's been doing this for a very, very long time, and he's written a couple of very good books that I'll let him tell you a little bit more about. But we're excited to have him in the room. First, before we start, I need to go ahead and read down our standard disclaimer. If you will, just bear with me a moment so I can appease the legal experts. This demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Thank you. Appreciate your patience there. I'm sure you've heard that a few times from us before. I'm going to go ahead and turn the time now over to Andrew Abraham. Go ahead and take it away.
Thank you very much, and thank you for the compliment, and I also thank everyone for attending this webinar, and hopefully I'll be able to share with you ideas that actually took me a long time to really internalize. And not to make this sound easy, growing wealth. I mean, it's a long process. It's very hard. And a lot of it has to do with psychology. And it isn't this magical indicators or making it very simple, but we're going to talk about the basic premises of what I use on a daily basis. I also have a disclosure. I'm also licensed as a commodity trading advisor, but primarily what we're going to be talking about and what I teach is on stocks. It's all the same when we're talking about the charts, and you can just glance through this. And some of the charts that I'm going to present to you are actual live charts of live trades that I've actually done and do, and then some of them aren't. But just to make sure everything is on the up and up, there is this disclosure here. As Dave had mentioned, I have written several books. One is called The Bible of Trend Following, in which I actually wrote for my children, and to teach them from a psychology standpoint, from actually a trend following, and the essence of what we're going to discuss tonight, trend retracement. Because that's the beauty. If you miss the entry, you always have many, many opportunities to get back in. And my other book is called The Bible of Compounding Money, which really that's our goal when we trade. And I discuss how I've done it since 1994 and what I do in the book. Basically, the strategy, trend following, trend retracements, the only way to make money, the markets have to move. And I mean, I don't really want to make things sound trite, but there's so many, like, I guess I almost want to say snake oil out there that try to overcomplicate things. Try to keep things really as simple as possible. And bear in mind that markets have to either go up or down in order to make money. When they're trendless, it's very hard to make money. And the other idea is also when we're having, only 4 possibilities of making money or losing money. There's big losses, big profits, small losses, and small profits. Our goal as a trader is to avoid the big losses and let the probabilities work over time. David, how can we switch over? I want to actually, because this really doesn't show so well, because we're going to talk about the stock market primarily and how to trade stocks. If we can go over to Metastock to do if I can do the share screen. Does that show up to everyone? Can everyone see my screen on Metastock? Okay, I guess it is. If you can just type in the box that you can see it, they can see it. Dimitri? Okay, great. First thing when we talk about the stock market, I have a rule. Where do I sit at this moment, at this juncture? Do I want to be long? Do I want to be not knowing what I want to do when it's very choppy? Or do I want to be short? And I use very, very simple indicators to tell me where I want to be. I use a 10-period exponential and a 30 exponential moving. And really simple, if the 10 is above the 30, I want to be long. There's nothing to think about. There's times, again, when the markets get ugly, or let's say they turn negative, you have a choice. You can either be short, and going short is very, very difficult, or you can sit on the sidelines. And you can see, using these moving averages, let's tighten it up for a sec, how powerful they really are. In 2011, which was really ugly, you were below the 30 and the 10, but even more importantly, what I use is another line, which is a very strong line, is a 200-day exponential moving average. If I'm below it, I'm looking to try to do short trades or be out of the market. If I'm above it, these are strong periods where I want to buy the strongest stocks in the strongest sectors. And with Metastock, you can really do that. Do an exploration, and it gives you the actual market or the actual stocks that are trending the most. So let me go back to the PowerPoint if we may. Can you bring us back to the PowerPoint, Dave? Now that I talked about generally, you have to know where you stand in the situation. Again, which I first came out and said, when you're trading a breakout or a retracement, you have a lot of opportunities. And I want to clarify something. The biggest money to be made in the stock market is if you can delineate using these simple moving averages with Metastock and the power of them, which is unbelievable, that you will know the beginning of let's say, the turning from a bear market into a bull market, or a bull market turning into a bear market, and your biggest profits are coming out of a correction, like in 2011, which we can talk about, we can show, and then also coming out, let's say, of March of 2009. And then if you want to take the standpoint of trying to go short, now that we've had this bull market going from March of 2009 to now, it's an old tired bull. But the strongest or the biggest profits are the beginning of new bull markets and after corrections. You almost want to embrace corrections because they give you the greatest opportunities for breakouts. But if you miss a breakout, there's these retracements, and we're going to talk about them and show them. And the whole point, if you're going to do a breakout or a trend retracement, you want to buy the strongest stocks in the strongest sectors when the market is healthy. Very simple. You can rank the stocks in Metastock. I have a formula. It's very simple. It's just basically a rate of change, comparing it, and you can either tighten it or lessen it to the amount of, let's say, of what's the word? Not volatility, but as far as sensitivity of how you want it to be. But you can actually delineate the strongest stocks, and then you can check for the strongest sectors. But really, this is only part of it. The entries are so minute as far as your ultimate success is trading. This really becomes a mental game, a psychological game, and that you have to have an actual trading plan that's full of risk management. And then also, what does it mean, risk management? Let me just focus a little bit on that. Is you need to know what to buy, which we discussed above here. You want to buy the strongest stocks in the strongest sectors when the market is healthy, which I'm saying is, let's say, the 10-period exponential moving average is above a 30, and you have these spurts. But then what you want to know is which stocks, and you can do an exploration to see that. But then you need a plan, and that's, there's not enough time, unfortunately, with just this presentation. But on my blog, I always give examples. There were actually, Dave was kind enough to invite me, and I talked about how to do trend breakouts. So you can go back and look on YouTube on Metastock and actually see them. How I put the plan together. But okay, I already kind of spoke before. Like I said before, the biggest moves are at the end of a correction or the end of a bear market, and it pays to be patient. And this really isn't the greatest screen, but the idea is at the end of, let's say, here we can jump back to here. Let's go back to here. There were some huge moves here with some of the strongest stocks. I remember one of them was Millinax. It was just huge profits. Or even if you want to even talk about right about here-ish, you had a little bit of weakness, and at this point, if I'm not mistaken, or it was back here. Apple was a very strong player here. So at the end of these corrections, it gives you great opportunities to look for the strongest stocks. Let's jump back to the PowerPoint if we may. Thank you. Okay. No holy grail. There is no magic. Unfortunately, that I get emails from people that they want this magical indicator, or they think they can take a course for a weekend or read a book and they're going to start making money. It took me a long time to, let's say, get on the track of trying to compound money. There is nothing perfect. The biggest issue that I really want to point out is this last line. You will never be able to avoid losses. Like I went back to those 4 premises: small losses, big profits, which are extremely rare, and small profits. The fact is, our goal is to avoid the big losses. That's why you have to trade with stops. There is no way to avoid losses, and it's accepting the uncertainty of trading. And it's not about any of these magical indicators, because they don't exist. Simple is better. What we're going to talk about when we're talking about the trend retracement, actually, there's 3 ways. And then also, I gave Dave an algorithm, which is like a pattern recognition, that actually he's working on, that will be available, I believe it'll be next year, that somehow or another we'll offer. But it actually delineates these, and it gives you like the setups. Actually, I placed them on my blog. Let me just jump to that real quick. I'll just show you. It's like pretty much every morning, I basically show you the positions, what I'm taking, the entries, the stops, and then it also works with profit targets. And it'll be the same thing, and that'll be available hopefully next year with Metastock. But jumping back to here, let's go. We said the three ways. Basically, before I start, the trend retracement, you can use this. Let me move this down. It's called the Force Index by Dr. Alexander Elder. It's a fantastic indicator. In an uptrend, when you have a pullback, you have a signal. But then that's only part of your trading plan. The other is just using basically, like here, let me jump to some of these ones that I've started with. Okay. You draw trend lines where you can actually see in Metastock up days and down days. And you can draw a trend line. You can see that it's above either the 10 or the 50, depending on whichever moving averages you decide. And it makes it very clear to use a trend line here, a trend line here. You also have the retracement here. A very, very powerful tool is the 50-period exponential moving average. When stocks retrace to it, it's like a very interesting point that many institutional traders look at and use as a basis. And you can see so many times in the strongest stocks that it'll hit the 50-period moving average and then start bouncing back off. The fact is, it's part of your trading rules. But what happens in a scenario like this? This was your initial breakout. And it was also on large volume. You can see it here. What also you can see is you had this big cup and saucer of basically nothing happening. And it was below the 50-period moving average. People lost interest. Traders, they just thought this stock was going to peter out. And then it seemed to come back to life. And where you really want to see it is where you have breakouts on big volume, which are right here. This one, this one. But then, let's say you missed the breakout. You can draw a trend line, and then you can buy the breakout of that. And then you have to determine where your stop is. Again, one of the simple rules of using, let's say, Investors Business Daily is they say 8% of your capital. Let's say you had $100,000 and you wanted to buy, let's say, 10 stocks. You had $10,000, and this stock is approximately a $100 stock. You just divide that 10,000 into 100, and then you can figure out the number of shares, and then you do 8%. That's your hard stop. That's one way to do it. Or you can even just look at the support here. Just say, okay, if I'm breaking out here, if it goes down to here, I'm out. Trade isn't working. The retracement didn't work. And you can see the signal here, a confirming retracement on the force index. I'll reiterate with the force index. If you're in an uptrend, which you can clearly see you're in an uptrend, and when you go below the 0 line on the force index, you get a signal. And then you want to see, it's very nice to see confirming signals when you draw a trend line here. You can draw a trend line here. You can even draw very simple, like a breakout again here. And then you've been taking off from here. And this could be a great trade. This is what trend following is. It's not having opinions. It's letting the market just flow and do what it's going to do. And you having the ability to be disciplined and patient as far as putting together your rules. Again, in my other videos and my other webinars, I speak more about trading plans. This is the biggest issue, to have a trading plan, to know at every moment what exactly you need to do. Let's jump back to here and go a little bit more with the PowerPoint, and then we'll go chart by chart on some of the strongest stocks, and then we'll see, we'll just see live examples. Okay, just to reiterate, we have the force index, which we talked about, and if you want the indicator, I'm not sure if it's built in with Metastock. I have it. I'll gladly send it to you. Just email it to me, and I'll send it to you. But as I said before, the entries mean really so little. Another issue, one of the large issues, is position sizing. I'm going to talk about that. I don't know if I made a slide about it. Oh, I'm talking about the force index. So let's just talk about position sizing. Position sizing is really one of the main delineators of success with trading. What it really means. Let's go back to that example. Let's say you had $10,000 that you were going to put into an account, into a stock. And let's say that the stock is trading at $50. Okay? So what you really do is you divide, very simply, 1 second, let me just get a glass of water. You divide 10,000 divided by 50. So you can do 200 shares, possibly. That's if you do the IBD approach. And if you're going to risk 8% on that 50, so then what you're really going down is approximately $4. If your stock goes down $4, you're out of your 200 shares. Another way to do it, let's go back to just an example here, depending on your rules that you need to draw up. Let's say, and again, it's very plausible. You see the force index here. You see a trend line that it breaks. You say to yourself, this was the lowest point. Let's use the exact examples on this one. Okay? The low is 118.68. Give it a little room, so make it 118.50, let's say. And you're buying the breakout here at this point of 122.12. Or let's say 22, give it another 10 cents. So, if you do the math on it, comes out that you're risking basically $3.72. And let's say, give you another example, you have a $50,000 account size. And you want to risk 1% of your account on this trade. So you're willing to risk, and you accept the risk that you say to yourself, when I put this trade on, I don't know what's going to happen. I accept the fact I can lose, let's say, $500. I'm willing to lose $500. So to figure out the number of shares, you divide $500 divided by 372. And that gives you 134 shares. This is the idea of position sizing. Let's say you're a gambler. You wanted to risk 2% of your account size. you're willing to risk $1,000. So all you have to do again is do the math. How many times does $3.72 go into 1,000? And this is the idea of position sizing. This is one of the main attributes of your trading plan. You need to know what your risk per trade is. The other thing you want to look at is your risk per sector. Because there were times that the strongest stocks, which we'll see in the recent stocks, have been some of these 3D printers. I've gotten signals to be in triple D, DDD, and then SYS, SSYS. So I don't want to get too heavy into a sector. So it's another issue that you need to think about as part of your trading plan. Let's just go back to the PowerPoint for a sec, if we may. Okay. Force index we spoke about, and as you can see it even in this diagram, and I believe this is Facebook. And you can see how Facebook broke out on huge volume. And it also retraced. So you had another opportunity here again. And also what's interesting, it retraced here. And here it is on the force index. You're in an uptrend, and it pulls back. 50-period moving exponential moving 50-day exponential moving average retracement. There are times which there will be fake outs, and there will be times where they work. At this point, it hit it, turned up, and depending on where your profit target is, you could have been profitable, or this would have been a scratch trade, depending on where your profit target is. I shoot for very low profit targets when I'm in the retracement at the end of a bull market. But this is another example, and this is one of the strongest stocks. It's also in the IBD 50. It's Wisdom Tree. And what you can see with Wisdom Tree is you had basically these cups, and it took out the 50-period moving average, almost went to the 200, and then basically start turning up. So you had the proverbial cup and handle. What is the moving average of the blue line? The blue line is the 200-day exponential moving average. The red line is a 50. Also, what I want to point out, my chart is so clear. I don't have a million zillion indicators on it. You don't need them. Simple is better. So what happened with this? And this is, you can go back and look at my blog. Actually, I took this trade on a retracement trade, and what was very interesting is it broke out, and it broke out on high volume again, which is positive, and then dragged down, sold off, hit the 50 exponential moving average, and then took off. I took this trade live. I made some nice money on it, and it's that simple. These things repeat over and over and over again, and not all of them are going to work. But the thing is, you're risking a small amount of money. One second, let me get a glass of water. Excuse me. Let's go to the next slide. Trend break. We were talking about these. It's as simple as connecting highs and lows. You want to go from the highest high to the low. Another interesting thing, you notice you had the force index also showing here, giving you another confirming signal. This isn't rocket science, but what makes it tough is that people want to be right. They want the trade to work. When you put on a trade, you have to say to yourself, how much is this trade going to cost me to see if it'll work? Do not have the expectation that it's going to work. It doesn't have to work. That's why you have hard stops. Let's say you took this trade. One way, the IBD way, is you can have an 8% risk from your entry. Or another simple way, and you can put on maybe more shares depending on what your risk is, you'd be buying the breakout here, and you're risking to the lows right here. It's that simple. But this needs to be part of a written plan that you make. I'm cutting to the chase where I said about position sizing. Success is not determined by the entries. So too many people, they're looking for the holy grail of entries or systems. It's not about that. The holy grail is really about mindset, persistence, confidence in the face of complete uncertainty, and the idea of risking. I try not to risk more than 1%. And in my commodity trading, I'm risking, believe it or not, 40 basis points in one of my models that I trade. And as far as exits, that's also part of your business plan. When I'm doing the retracement, and what I'm saying is, where do I sit right this second? I know I'm in an uptrend. I know that there's going to be some stocks, for whatever reason, pull back. But what I also know is this is an old bull market where there's a propensity or a possibility of a sell-off coming sooner than later. So I'm trading actually very nimbly at this point. And I'm also not risking a lot on any one trade. And the idea, I'm always looking to try to, let's say if I'm risking $1, I want to make $2.50 or $3. And I'm also using time-based exits, which is part of this algorithm, this pattern recognition that actually I'm trading live, and it shows up on my blog every morning. And you can look at it. It's free. And then I'm going to go, and we're going to go from some charts. I've been doing this since 1994. I'm a strong believer in the KISS principle. Keep it simple and sweet. Or as Einstein would say, keep it simpler and nothing more than that. I'm not doing it the exact verbatim. All of trend following really is, and it works on if it's going to be Forex, if it's going to be commodities, if it's going to be on stocks. Things trend. They don't trend all the time. What the beauty of Metastock is that you can actually sort to figure out what's trending. And you can do that on the Explorer. One of the ways I do it is I look at a rate of change, and I can give you the algorithm for it. And the idea is you identify the strongest markets. Another way you can do it also in Metastock is you just do like an ADX greater than 30. And you do a search. And you can see whatever is trending, either up or down, and look to put those on your watch list. I learned with a gentleman who started in 1979. I had many other mentors. But one of the things that really that stuck with me was how this gentleman, who was a dentist, he wasn't a money manager from Goldman Sachs or anything else. He was a dentist. He started in 1979. He was a client at a brokerage that I knew and I worked with. And the story is that, and also I believe he's also a client of my accountant too, or wasn't a client of my accountant. Started with about $200,000 in 1979. He always had losses. He always had long durations of drawdowns, and it wasn't easy. But he was able to compound it to a huge sum of about $18 million. He didn't have the Holy Grail. He was a trend follower. He's still a trend follower. So what I was talking about, trading plan. You need to figure out what a trading plan that fits your personality. I mean, this is what I do. I mean, when I teach students, because it helps me also. I help them to develop their own trading plan. The trading plan tells you what to buy or to sell, how much to buy or sell, when to exit with a profit or a loss. So everything is thought out. You know what you're buying. You know how much you're buying, which is the position sizing, which we talked about briefly. And again, I have other videos that talk about position sizing. And really, that it becomes redundant. You do the same thing over and over again, and you don't get excited or upset that the trade didn't work. Because over your trading career, hopefully you're going to have thousands of trades. And the idea is that there's no surprises. You put on a trade of the stronger stocks, let's say, or strongest commodities or strongest currencies. You know how much to put on, that you're not risking too much so that you don't blow yourself up if the trade doesn't work. You know where to get out with a loss if the trade doesn't work, and you know where to get out trade it with a profit. And let me just delineate a little bit what that means with a profit. You can follow it as long as you're above. Again, if it's a moving average, if it's above an average true range, you're in. It goes below it, you're out. It's as simple as that. Or let's say when let's say you take your first trade. Well, when we jump back to that, let's say, let me jump to here real quick. If I'm buying the breakout of this trend line, and with these the force index here, I know if I'm going below this point, the trade's not working. I know that if I'm buying the breakout here and I go below the lowest low here, the trade doesn't work. So I know where I have to exit, and I follow the plan. I don't change the rules in the middle. And this is the problem. Most people don't have the deep belief, the patience, or the discipline to stick to the rules. And the other really key point is like this. I mean, I'm probably the antithesis of what everything really is. Trend following is very tough. It's not easy. You're going to have consistently losses. Any trade is 50-50. But the idea is that you want to keep your losses small. And then when you're trend following, have the trades that work to have your big profits, which offset them. And you have to be persistent and not give up. Because it's very easy to give up and quit. And then jump to the next system. And that's what people do. And that's the problem. You can't. Start with something so simple. And trend following really is simple. And it's like Michael Covell wrote a book. I'm drawing a mental blank. How traders make millions in up markets and down markets. You know what? It's true. But you know what? It's very, very hard, and most people can't do it because they over leverage themselves due to position sizing, or they never know what position sizing is. They have a series of losses in a row that don't work and say, the system doesn't work anymore, and then jump to another system. Well, trend following does work. It's worked for Richard Dawkins until he was trading it to his 90s. It worked for a dentist who's 80 years old. But what I want to highlight, it's never easy. And there's always going to be losses. But you have to keep them small. And that's part of your trading plan. I made every mistake possible when I traded. I looked for magical indicators for entries and exits. I never even knew what a trading plan was. And then once I had help from mentors, and I developed a trading plan that I believed in, and followed and accepted the uncertainty of any trade, I started to become profitable. And I said simple, robust trading concepts like trend following hold up over decades as long as you're focusing on money management. And really internalize what I'm saying. It's not the entries, it's not the exits, there's no magical indicators, there's no magical anything. And once you realize they don't exist and focus on a plan, and you can use trend following, you can use trend retracements as part of your entries, then you're going to possibly put yourself on the path of profits. Think in the next 1,000 trades. Any one trade is insignificant. The idea, what I'm saying that is that you're risking a small amount of money on your account. Let's say you're risking 1%. You have to be wrong, if you want to use the word wrong, or I'd use the word trade doesn't work, basically 100 times to blow up at 1%. If you're using 0.5%, and yes, you can make a lot of money with 0.5%, even 40 basis points, you can make a lot of money when things trend. Basically, you have 200 times for a trade not to work. The possibility of that is negligible. But I'm going to tell you the other interesting thing. There will be times, and I guarantee it, that you will have 5, 6, 7, 8, 9, 10 trades or even more in a row that don't work. But you can have small losses. This is what trading is. The biggest mistakes revolve around not having a trading plan or not following it. You have to believe in it to follow it. And the more simple it is, the easier it is to follow. One of the other reasons traders blow up, they'll risk too much of their account size. Let's say you had a $50,000 account size. They might risk $20,000 or $10,000 on one trade. And I've heard that repeatedly. Don't. Risk 1% of your account size as a maximum. You need to have money management rules. And again, we're a little short on time because I also want to go a lot of charts and show you how repetitive these things are. But quickly, money management, risk per trade. I don't risk more than 1% on any one trade. If things are in the same sector, I don't want to put more than 5% of my account size at risk. And then also, I look at my whole portfolio, and I don't want to risk more than 20% of my whole portfolio. I also look at other issues. What is the dollar risk? Maybe the dollar risk is too large on the entry to the exit. It's too big of a move. I'll look at that also. Or let's say the risk per contract. Let's say my account size is $300,000 and I'm risking 1%. I don't really want to risk $3,000 on a one lot on a commodity contract. It's too big of a risk. I'm looking to play defense, 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 and stumble into profitable trades. The key here, what we're going to do, if you want to succeed, is being patient and disciplined. And you know what? It's going to sound terrible. Stumbling into big winning trades, rare ones, and mitigating your losses to small losses. Before I go to what Metastock is offering, let me just say personally, I've used Metastock since 1994. What I like about it, it's so simple. It's so easy to use, and the customer support. But it's just the reality. I do use it. We'll go back to the offers, but I want to go through a bunch of charts. This is what you guys really probably are going to be interested in seeing. But let's go. Okay, we talked about activists. Let me delineate what a trend breakout is. And we have the indicator here, and I can even give it to you for free. Basically, you're buying the X period, the 20-day high, the whatever magical number you decide on, and then you have your protection, or your hard stop, is the X period low. But to make it even more sound than that, what I like seeing is let's say, stocks that are, let's say, the strongest stocks, but then they go through these periods like cups and saucers that just have problems. And then you can see where it's a cup, people lose interest, but this thing has really moved where it's gone from 58 to 90. That's a nice size move. And then it's pulled back. You buy the breakout here. And a simple trend following rule, which would make you a lot of money. You would have bought this thing here. And again, I'm talking about patience. What is patience? Don't run and take your profits. You'd still be in this trade from March 28th of 2013. If you're using a 50-period exponential moving average, you can use that. You can also use, an average true range. That's what I'm saying. Pick what you feel comfortable doing. You can even increase your exposure to this where the stock had a massive pull-up. You see the volume here. That means institutionals are buying this. They believe in it. And they're not afraid to buy high. They don't have to buy cheap. They're not afraid to buy that it's hitting a brand new high. But it pulled back. This is the idea of an retracement. You could add to your position here. You could have risked from here and bought the breakout. Or you could risk from here to a close below the 50-period moving average. Again, this is something that you need to keep rules of. But you know what? Imagine you bought just 50 shares of this thing. You went from, let me just see where we bought from. This breakout of 91 here. So let's say you're at 90, and now you're at 163. And you only had 50 shares. That's a lot of money. It could be a small percentage of your account size, and if you have the patience to stick with it, you can make money. And this isn't rocket science. This share, you can do searches in the Explorer, and it'll show up as one of the stronger stocks. You can also look at Investors Business Daily. I build my database on that. Let's go to the next one that I have. And another stock I talk about is Acorn. Here we go. Similar scenario. Really, it's just chopping around doing nothing. But then you could buy the breakout up here. Buying a new high. High goes higher. Pretty cool. And then you know what? You had opportunities of retracement. Here was one here on the Force Index. A couple days pullback. So imagine you bought the breakout of this bar. You could have risked just to here, to the low, or to the 50 period exponential moving average. You could even have done a horizontal line here. You had this period, a lot of September, nothing happened after the breakout. You can even draw a little trend line here. You had another opportunity actually coming up today. You see it right here. On the Force Index, you have a pullback. But again, you could have bought this, the breakout here, stuck with it. It's a nice profit. Well, here, I was in this one. This is a retracement trade that I took recently. And you can go back, and you can see on my blog, they're all here. Every one of them are listed. I list all that. You're just going to go back and you see them. And I discuss them. I show them before I'm even taking them. This one we'll get to. This one, I think it was called Type or something. But here, let's go back. I took this trade. Had a lot of reasons to take it. Look at the volume going into this one. Huge. And then it sold off. And it hit that 50 exponential moving average. So I said, okay, if it breaks out the high of it, I'm willing to see what happens. And that's it. And I'm looking to take a small profit because I'm very skeptical of this market where we're at for numerous reasons, which, again, you're having distribution at the top. We're at new highs. We're not making newer highs on strong volume. It's an old bull market. You have extreme optimism. You have margin debt at extreme levels. So I'm being very cautious, being very tactical. I'm not at a point where I'm, let's say even in 2009, where I'm looking for these, cups and then buying them and then looking to hold them for long, long, long periods. Whoops. What am I doing wrong? One second. I want to get to triple. Well, yeah, we can look at this one too. You can look at Chipolita. Again, base. But what's interesting is you had a breakout here on high volume. Hit the 50 exponential moving average. Didn't really do anything. Hit it again. But imagine you just went long at the breakout of one of these and just held on. And there's every reason you could have. It didn't take out the 50 exponential moving average. You had numerous opportunities to get in again. Just draw a little trend line. Here you're seeing institutionals come in strong with this volume. Institutionals coming in here, they're telling you right. But look right here, you could draw a trend line and you're looking to buy it. It didn't really happen. But if it closes above this trend line, you might even want to add. I was in this trade. You can see the massive volume selling here, the pullback. I got in here, and you can go back on my blog and see it. I posted live. And I exited after a couple points. It was a nice trade. Very nice. You get in here, out. You see the retracement here on the Force Index, pulled back. But the thing is, you have to be willing to accept when the trades don't work. And try to take low-risk bets. Here's another example. This thing is moving. It's above the 50 exponential moving average. It's been moving. You took off like you could have had a breakout buy here. When then it didn't work a little bit, you might have gotten a little nervous, a little shaken up, and then start taking off. But then you had a retracement here, and it got close to the 50 exponential moving average. You're a buyer. Again, draw a simple trend line. What's your risk to? Your risk could be to the low here, the breakout here. You see it. You buy at the next bar the next day. You would have bought here, you're risking down to here. Here's Facebook. Facebook's a nice example. I think I was in this trade also a while back. Had this big move up, pulled back. Here's the force index. Took off. Depends on where you want it to get out. Again, I'm being nimble. I'm taking out when it gets to the prior highs, taking out pieces on the way up. And then you had a fake out move here, which is pretty cool. And it's building a new base, it looks like, Facebook, which would be pretty nice to give us another round to go long. The idea that you'd want to be buying the breakout of about 54.91-ish. But you want to see even a longer base. I mean, you're talking from October 18th. It'd be nicer if this base builds longer also. Again, here we go. We had a pullback. Force index, 50 exponential. It held, kept on moving. You could have stayed in. You could have taken out profits depending on your plan. You had the same scenario here. These things repeat over and over and over again. But it all depends on what you're seeking and what your goals are. Let me jump back to here. I want to go back to the offers, and then I want to make myself available if there's any questions. If we can, Dave, if we can put on the offers, and then if I'll open the floor to basically, these are the offers for Metastock, and Dave will talk to you about them more. And this is a way to contact me. This is the website, this is my email, and if there's any way I can help you, I'm more than willing to help you. And if it's okay with Dave, as I think we talked about it, and I don't know if we finalized it, if it's okay, I'm willing to give everyone who attended this this webinar a copy of this book. I'll email them the copy of the Bible of Compounding Money. All you have to do is just email me, and I'll gladly send it to you. This book I can't, because I actually was published with Wiley Books. But this book I'll gladly send to everyone who attended this webinar, and it's just as my little way of saying thank you for attending. So let's if I can open it up to some questions. The period for the force index. First thing, there is no magic number with any of this. I suggest you test it and what you feel comfortable with. But again, they're standard. Let's see what the force index is here, and you just go like this. That's the formula, and I believe it's. I didn't really make any adaptations to it. I don't think it's necessary. There's no magic numbers. Let's jump back. Okay. Okay, is there any other questions? The next questions? Anyone else have questions? How do you use the force index? Okay, I'll repeat. Basically like this. If you're in an uptrend, clearly you can see this 45-degree angle. Every time you're below the zero line, and there's a zero line here, which you can see right there. You can see the zero. It's giving you, it's saying it's a retracement. And the greater the number, the bigger the retracement. And you can delineate, again, according to your rules, how much of a retracement you want to see. I want to see big retracements. I don't want to get shaken out with the smaller ones. Again, there is no magic number. I like seeing a strong retracement. I like seeing a retracement to a 50-period exponential moving average. I mean, that also is a way to, to confirm a little bit. Actually, I'm in bid. That's pretty funny you're saying it, Colin. I actually took the trade a couple of days ago. Let's go to it. Let's go to bid. Hold on one second. And again, I'm not really giving personal advice. I mean, I just basically, no, bid is bio, one second. Let me do it this way. Bid is Biogen. Just wanted to make sure I'm giving the right chart. Okay. What happened with this? I'm in this trade not because of the force index. It's an algorithm. It's a pattern recognition that includes volume and then, let's say, lack of movement. But I took this trade. And again, on my blog, you can see it right here. Let me go to... Basically, what I'm doing is I'm trading very, very, very small account size. I'm trading a $60,000 account size. And it's a retracement strategy, pattern recognition. And then here it is. And then you can see where I'm at. It's a $60,000 account size. Usually my accounts run from anywhere on any program that I trade or when I manage money is anywhere between $150,000 to $300,000, and I have one for $500,000 in any one idea. And you can see all of these. I post them again on my blog, and they're all retracement trades. And what you can notice, some of them work, some don't work, but I have a hard stop that also protects. Okay, of using range bars and time bars. Here, one second. Let me go back. There's too many questions. Let me go back to here. What percentage of the account to use on each trade? Okay, one second. How to use the force? So we said that. TY bookmark. Okay. What percentage account to use on a trade? I'm risking a maximum of 1% of my account size on a trade. Maximum. So hypothetically, I'm risking about on this one $600. Because then when you trade such a small percentage, you don't care. Because you don't care if you have a loss. You don't get excited. It's not like I lose 3,000 or 2,000 or 5,000. And in my commodity trading, basically I'm running 4 different programs. And I'll tell you this has been one of the toughest periods ever that I've gone through trading since 1994. I'm risking in one program 40 basis points. One I'm risking 60 basis points. Another 75 basis points. That's it. And it's enough to make money. And a lot of money over time. Okay. The Bible of Trend Following Trade changed my trading outcome for the positive after reading a few chapters. Well, I thank you, John, for that. And it's the best book I've ever written. Wow. I hope my children tell you the same. I mean, I wrote it for my children. And again, my goal is to help and to give back because I've been given a lot of, and again, it's not that I wasn't taught magical ideas. I was taught how to think. I was taught how to accept losses. I was taught how to accept the uncertainty and how to use risk management. That's really the key point. Let's jump to Kevin. Colin, if it's going higher. We don't know if it's going higher, but that's it. If it goes higher, great. If it doesn't, oh well, I'll take my small loss. Are there any stocks or sectors you would enter the trend for a long position? Well, in the stock market, I'm waiting for a correction and possibly a bear market, and that's where I want to come out with my heavy guns and to sit tight for a long period of time. However, if I'm talking about what I'm going into, like, again, I'm talking about commodities. I mean, again, we're dealing in complete uncertainty. I mean, one trade that it's working so far, and who knows it'll keep on working, is natural gas. But, again, I let the markets tell me. I have no opinion. I mean, it doesn't mean anything, anyone's opinion. And really what's going to happen when you get to a level You will get to a level when once you build a trading plan, you'll realize that nobody knows any more than you. There's no magical money managers, there's no gurus, and that's what I talk about in this book. I mean, I do two things. I do my own trading and manage money professionally, and also I allocate to other traders who understand risk as much as I do, or as my wife would say, obsessive compulsive paranoid, and manage the risk. And even that, you have surprises because we're dealing with uncertainty. Let me jump to the next thing. So I want to buy the strongest stocks or the strongest, let's say, commodities which show up when they're breaking out. Do I always use a 50 or 200, or you can use a 10 or a 50 or pattern too? It's all part of your rules that you need to decide on your own, Dom. Again, when I go back to this, to me, this is so simple and sweet. I have very simple rules. Very simple rule is like this. I'll just reiterate. And again, I'm recording this video, and so is Dave from Metastock. Simple rule. Let's go back here. Let's even go back even more. If we can. At this point, I don't want to be long. I need to know first thing I do in the morning, at 5 o'clock in the morning, when I start trading, when I prepare what I'm going to do. I say, where am I today in the market? Am I above? Again, I like using a 10 and a 30, and it's not magical. A 10 and a 30, if the 10's above the 30, world's looking okay. If I'm above a 200 moving average, that's also looking okay. So I do that first. But again, what works for me might not work for you. You have to use your own trading plan. And then what I do is, let's say if I'm looking to buy breakouts and to ride these things, and it is possible to ride them, is I want to basically buy a period that's like this and a breakout of it, and then use my 50-period exponential moving average as as my, let's say, line of demarcation. If I'm crossing below that 50 on heavy volume, something's not good. That means institutions are selling. That's not good for me. Again, these are my rules. They need to be your rules that you can follow. And also the other thing too is I can scale out at times. If I have a big move, and let's say I bought it here, and let's say it's at 90 and it pops to here, I'll take some chips off the table and then maybe add some more again here to mitigate my risk. There's no magic to it. Let's jump back to here with more questions. Do I ever forget to move a stop or break even? No, because I have real money on the line, and I do this for a living, and I basically, I'd probably be pretty mad at myself if I do that, but I'm not perfect. I do make mistakes, but once you make it a routine, then you're less apt to make the mistakes. In Metastock, how do you filter stocks to find the strongest sectors? It's a rate of change. Really simple. Let's see if it shows up here. 1 second, because this is the... Here it is. Trend following mentor ranking. If you want, email it to me. I'll send it to you. Or here, you can even see it. It's not rocket science. Basically, what I'm doing is I'm comparing, let's say 3 weeks, 6 weeks, and 8 weeks, divided by 3, and I get a numerical number. Again, there's no magic to these numbers. You can make it as sensitive or as less sensitive as you want by changing these numbers. This is the beauty of Metastock. That, you can use so many different things that you can define your universe. And that's part of the trading plan again. And again, here it is. You can see it. I don't need that. I'm not going to run it right now. Okay. Kevin, thank you. Thank you, Kevin. Thank you for coming. 10:30. It doesn't matter. Again, I want to highlight the most important thing. There's no magical number. Because like one of my first slides, I said the market has to move. The market either has to go up or down. It depends on your personality, how sensitive, or how, it's a double-edged sword. You want to make it a 5 and a 10, it can work. It can work for you. It'll get you into trades earlier. and get you stopped out earlier, or you can use let's say a 30 and a 50. You get in trades later, and you get out later. There's no magic to any of this. You can use a simple, you can use an exponential. It doesn't matter. Do I day trade? Yes or no? Your opinion of day trading futures? Again, this all depends on your time frame. For me, what I try to do, I like trading dailies. It's less stressful for me. I try to get my orders in. Everything is done before the markets are open. Every potential outcome is pre-thought out and done, and the orders are done, and I try not to even look at the screen. I don't want to look at the screen. It doesn't do anything for me. And this is one of the things that I learned from my mentor, and this is one of the things that Ed Sekoda would talk about. Again, if you want to sit in front of a screen and you have the mentality to do it and your personality, then if it works for you, that's great. It can. I prefer not. John, are you still using 2, 5, 7 to gauge strength? Again, there's no magic number. Basically, edit. Here's 3, 6, and 8. You want to do 2, 4, 6. You can use anything. It doesn't matter. You can experiment with it a little bit and see what you feel most comfortable with. There's no magic to it. The other simple thing, what I do, is I use the IBD 50, Investors Business Daily. They do a lot of the work for me. They basically give me the list of the top 50 stocks. I read the newspaper every day. I look at their top 100. I look at those, and then I'm looking for situations. Or really what I'm hoping for at the beginning of a new bull market is something that I can stumble into, which, again, the proverbial, what they talk about is something new. I mean, think about Netflix. Think about Chipolita. Think about Tesla. Think about some of these medical companies. I mean, they're there. They're there. And you just use these simple techniques that I talk about, and you'll be able to catch them and ride them if you have a trading plan, discipline, patience, and money management. Okay, are you still using the K? I guess I just answered John. If there's any other questions, I'm glad to help. Oh, here we go. What do you think about having a method then automating it so the computer does the trade? There's a lot of algo tradings that they blow up. I kind of I'm a mechanical trader, yet I'm a flexible trader. I mean, I'm rigid in my rules and flexible in my expectations, and I try to think. So I don't really want a computer to just do it. I mean, it could be a glitch, it could be a bug, and it could be a mistake. So I'm not, again, there's algo traders like Renaissance, and they make a lot of money and they're very successful. But, again, it all has to fit your personality. Okay, multiple attendees are typing. If you're below the 200, how do you recognize the breakup like Tesla now? Well, Tesla was topping. Let's look at Tesla. Let's open it. Oops. I might have too many windows open. Okay, bingo. Okay, Tesla, you can look back, it had some interesting things. But you know what? In hindsight, that's great, 2020, but let's do the reality, what's happening here. You had a nice breakout here, which, let me see if I can, it's hard to see it, but there was the initial break here, and it was on high volume. You broke out. You also have retrace. You know what? Here, let's just do this. Ching. You broke out, but also you retraced. You had another retracement, force index, what we talked about. You had a nice, you had another. Just draw a trend line here. let me try to, I want to, one second, I'm going to make it a weekly and then go to a daily. Okay. Let me make sure I understood the question correctly. If you're below the 2, how do you recognize the break of SLF now? I mean, if I want to analyze it, well, it's like kind of late in the game, but there'd be no reason in the world you should still be long Tesla when you had high volume going here and you're below the 50-period moving average. This kept you in the trade this whole period. Once you violated it, and you had a couple days here, let's see how big the volume was here. I mean, this is on bigger volume. I mean, at this point, I'd be getting pretty nervous. And then at this day, with the big volume, I would be out. Actually, I had this trade. Again, this is another nice little setup where you had a pullback. You had it here on the 50. And then you had a nice little run up. From 174 up to 188. Those trades, I mean, you could have just risked from the high to the low here. Wasn't that big of a risk. You should not, I mean, put it this way. What's happening potentially, maybe, 2 things. One is that Tesla's building a base, which would be nice to see. And you'd be looking to buy, you know, like a cup and a breakout of that handle, like some kind of a breakout to catch a trend. Or it's retracing the 50-period moving average and could fail. I mean, and you might be even wanting to go short if the 50 is below the 200. Again, it's all part of your rules. Let's see what Alfred is typing, and then I think we're going to call it. The other thing, too, you know, if you want, my email is up on the page. You can email me after this, and I'll answer you. I'll try to answer your questions as best as possible. And again, just for attending, I really appreciate everybody who came. I'll send you a copy of the book about compounding money. Let's see if, let's see, Alfred, oh. The Forex tutorial. Okay, perfect. Dave, is there, maybe I throw it back to you now?
Yeah, thank you. Really appreciate it. Andrew, fantastic webinar as usual. Everybody take him up on the free copy of the Bible of Compounding Money by emailing him. Right there is the email address on your screen. For those of you who do not have Metastock and you'd like to take advantage of the special offer, let me go ahead and put it in the chat box. You can go to metastock.com/trendmentor2, and that will give you 3 months of Metastock for the price of 1. That will give you everything that you've seen there today. And Andrew is kind enough to show us a lot of the formulas that he uses. He's willing to send you the formula language for those. It's very easy to import into Metastock. We really appreciate having you in the room, and we want to wish everybody best of luck and have a terrific rest of your week. But make sure you take advantage of that free book and give us a call over at Metastock if we can help you get that set up as well. Thanks, everybody. Thanks, Andrew.
Thank you, Dave. Thank you, everyone, also. Greatly appreciate you having me. Thank you.